Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. The first 60 minutes are here in YouTube, and then this stream continues exclusively in the Bookmap Discord Trader Lab community for another half hour of real-time narration. Thanks again for visiting. We have an interesting day today, of course, and we'll get into it right away. Just make sure I've got things percolating okay. Hope you guys can hear me okay. Please give let me know if you can hear me okay in YouTube and the Bookmap Discord Trader Lab. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is based on structured trades that are available to all of you in the Bookmap Discord Trader Lab community. One moment. Just getting a few things going here. Sometimes you just gotta, by the way, if you want to keep watching the stream when it finishes here in YouTube, there is a link in the bottom of YouTube. There you go. There's a link in the bottom of YouTube. You don't have to be a Bookmap subscriber, though there is a free digital version available to everyone. If you want to visit the Discord Trader Lab, it's a community of like-minded traders. There's no cost. The stream will be continuing there. Plus, you can download structured trades there that I share and what are based on this stream. Market mechanics, how the market works using order flow with a high-tier tool like Bookmap to attempt to gain an edge. And everything in trading, of course, the outcome is random, but what we try to do is put the odds, if you will, on our side. So let's go take a look. First of all, we opened higher inside of yesterday's range. Now, the other thing to remember with this is, one moment. The other thing to remember is that the market goes up to go down and the market goes down to go up. I always start with this, and that's why, even though the market sold off high on Friday, the market is short. So what does the market tend to do? It tends to go up the following day and squeeze weak shorts. And then the idea would be, now there's a couple possibilities. You could take the longs, looking for the squeeze, and then you can turn around and get short. That is today's plan. Now, you know, what happens, of course, like everything in trading, is always maybe. So let me get into today. I am currently watching the market, so I'm keeping a little eye out over here on what's going on. So, statistics. Opening higher inside of yesterday's range. Write these down. Past performance not indicative of future results. Like everything in trading, you have to vet, which means make sure it works for you. Validate everything, no matter where you hear it, because you have to have belief in things. You have to kind of create your own plan. The Trader Lab is a community of traders in the business of the Trader Lab, and the goal of Trader Lab is to help traders build a business, develop a career in trading. It is not a video game. It is very much like casinos operate with statistical edge, and understanding you're in an environment that you do not control the outcome of a trade or how the other participants interact. You can only control what you do. So it might make sense to do the things that give you a statistical edge and not do what other retail traders do. There's something I always say: think like a retail trader, don't act like one. So looking at the targets, potentially ETH high in this condition has a 69% probability of getting taken out. Just saying. Got to move around here a little bit. Up here, I hope I marked it. Let's see if I did. Yeah. Over here, there's a low volume zone from Friday. What a low volume zone is, when the market rips, it doesn't stop and consolidate or auction. It just runs. Well, that becomes an area to target that if we get up into this, we have a potential target if, and there's no way to know what will happen. That's part of the joy. And there's a single at 94-ish. For the longs, this is the target. Now, by the target means it's an area we could traverse. Remember, the higher time frame is down. So the fact that we can traverse an area doesn't mean we're going to get here. And since we're looking at the squeeze of the shorts, at any time we can get a reversal, and then we'd want to get short. So that's the plan for today. Now let's do a few more little things. Overnight volume point of control, which is somewhere here. This is the highest volume in the ETH. That has a 82% probability of getting taken out. Then you'll vet these for yourselves, right? The ETH high, 69%. The first hour's high, 67%. The previous point of control, which is the highest volume from Friday's RTH, here, 70%-ish, 68%-ish. And this, which is what I was aiming for on my short, and still am actually, is about a 72% probability. So we're looking longs for the squeeze into here and wherever, up to here, maybe. Then we're looking for shorts down to the overnight volume point of control and the overnight mid. That is kind of the lay of the land. So that's how we play it. And now what happens? Part of the joy. Nobody knows. That's just the way it is. One moment, please. 63, 7. Okay. All right, sorry, just moving a few things around over here. Okay, you guys ready? If you have questions, please post them. Remember, this stream will continue in the Bookmap Discord Trader Lab community. You're all welcome. I'm still having a little trouble with my chats here. Hold on a bit. Let's see if I can get these working right. Okay, let's get started. So what we're looking for is we're in a gap. So when you gap like that, the current shorts that are sitting in the market are going to get potentially squeezed. And then, of course, it's, whatever. Right now, we are in a condition called mean reversion. The context has changed. And I've been posting this morning in the Trader Lab, the condition as it develops. And the other part about developing condition is the nature of having these conditions to understand the development of condition or context and to define when it changes. Now, we cannot predict anything. All we can do is follow the participant behavior. So that's part of the joy. So RTH open, here we go. This yellow line is a developing volume point of control. So there's a couple things we can anticipate. We can anticipate sellers who want to get short because of the gift of the gap. And then if we rotate up from here, it sets up a squeeze of these early sellers and a continuing squeeze of, so these sellers and then current sellers that are sitting short in the market. That's kind of what it does. So let's go take a look. So we know in the condition we are in, coming in, that we are favoring the long side. So let's see how we determine where to get long. And these are based on structured trades in the Trader Lab. This is called the variable high volume node. What is a variable high volume node? It is an area of high volume that we leave. And early on, when the market opens and there's no volume, it starts at 0 here. This line is very sensitive because it's measuring volume. You'll notice we break away with the early selling and we leave the volume. Then we pause here, and this is a consolidation. So there's more volume taking place right here than there was up there. That's why this moved lower. This is now the current or new retail price. So what does that all mean? It means if we break below it, we continue down to our target, the ETH overnight volume point of control, 82% probability. Or it means if this is too low, we will reject it, and there's no precision. Remember, this is trading, and it's, who knows, it's random. By the way, write that down. We are in an uncertain environment. Most of us, and I'll maybe speak to this later, most of us, because of primal wiring, make decisions and have beliefs that are not related to the business. So we kind of focus on certain things. I'm going to go into that later. So we make decisions based on our primal wiring, not based on the business we're in. And you can go off into off a ledge, if you will, with belief that you're trying to fulfill that doesn't fit the business. So right here, if this is too low and we leave it, it is saying at the moment, and this is what you have, at the moment, that this might be, and I'm using the terms you have might, because all you have in trading is might. So it's very important to think about what might be happening, and then have a structured trade plan that when you recognize what might be going on because of the uncertainty, that you take action if it fits. This is the variable high volume node. This was too high. This microstructure right here was, trying to get it in here, too high. So what's too high? Let's take a look. That's too high. Get back here. Too high. Too low. So we have resistance, resistance, potential support. Now let's watch the yellow brick road. Follow the story. What's the story? Higher time frame down. Shorts in the market. Early sellers. Oh, I'm selling the gap. Where's the buy stops? Above here. If you're thinking longs for the squeezeteria, we have to mark this. Opening swing high. Why? Buy stops. Let's label it. And I suggest everybody do this because it's easy to get myopic and forget. And what's this down here where the behavior changed? Potentially opening swing low. I'm going to get it in the ballpark. You'll forgive me, right? So I know now I'm bracketed with sellers in this leg, buy stops here, and then maybe buyers coming up over here, short covering with the opening swing here, and sell stops under here. So that's my ballpark. This is now too low. I break high. The volume point of control, which is where the most volume is in the developing daily time frame. So this is fractal. I'm trading inside of microstructures, and I can go down as low as I want to go, you know, and I need to go. So I'm using this little volume right here as resistance, support, support. So now we're going to look. Let's watch the yellow brick road. What do? I test this. Here's the way to think of this. It's like shopping. And that's how I see this. It's a very simple. I don't think trading has to be complicated. I think we have a belief, again, that in the complexity, we find the needle in the haystack that everybody else has missed. I'm going to suggest that's not the way it is. I'm going to say everybody knows everything. It's just whether they can put it together in a cohesive, disciplined process that has an edge. That's our business. So if this is too low, and this is too high, there's our resistance. I break back here. There's more volume in this structure because it's for the whole day than there is in this little thing over here. So this is weak and it's the opening swing high. Pull back here. This is a long. And you're looking to take out the opening swing high. That's the high, by the way. I don't know what to do. I did this Friday too. I called it, I labeled it the wrong way. Opening swing. So this is where the stops are. So if I get long, I definitely am going into the stop. So I know I got a target. I think it was a 69% probability of getting here. Long from here is a scale here. There. Now, hold. Watch. VPOC migration. Let's watch. Now, oh, I got to turn something off here. Hold on a second. It's going to distract you. One moment. Oops. Hold on, guys. Got a little chart thing going on over here. It's covering up the chats. Got to get them back. Sorry about that. Give me a second here. All right. Whew. Okay. So now VPOC migration. This suggests it's going higher. But now let's look at what happens. There's a transition here. So what we have is sellers here, opening swing low, opening swing high, break high, VPOC migration. This is a early long structured trade in the Trader Lab. ETH high probability target for scaling. And then low volume zone here, and then the wild card, if you might say, with a potential target there. So that was the trade on the long. So that's the longs, okay? So that's all laid out. We all know that if you're in Trader Lab and you have a vetted plan that actually reflects this. Now, we also talked about in the Trader Lab the possibility of a couple things today. First of all, the short squeeze and then fall out the bottom, go to targets down below that have high probability. The other possibility was what's called a neutral day. That's where we take out the first hour's low and we take out the first hour's high, and potentially we have an inside day. So this is also part of the possibilities. Our job is not to predict. It's to anticipate in order to participate. And then you don't know. So if this is retail and I come up, now I'm above here, and I fall under it. Now there's a couple possibilities. Let's look. This changes the context from directional to rotational. And when you come across this, which is your high volume, let's go shopping together. This is retail. And what happens is when you get rotational instead of directional, the market then is pausing, and what it's looking for is what's too high and what's too low. Now, here's the issue with this, and it's just mechanics, market mechanics. If this is too high, I'm not paying that. And this is the retail price right now in the developing time frame. And now what's too low? Somewhere out here, or not at all. Or we leave this and we come back here. That's what I know. That's all I know. I don't know anything else. And I can come back here also. I can come outside. Now, what we have is something called distributions. And this is more volume profile oriented. But what you've got here is consolidations. When the market auctions, and think of consolidations like auctions. In other words, that's too high. Yeah, but it's on sale. Here's the retail price. I got to label it, by the way. Slipping in the turns here. Variable high volume node. Now, what does it say? You see, the thing about profile and auction and all this, I don't use any indicators because my indicator is the participant behavior. It's not some price-based something or other that's following. Why did we leave this area? It's not because something crossed over. It's because maybe this price is too low. That's why we left here. If I know it's too low, what's the next area up here that now, which was resistance, is now support? It's over here. So I know the possibility exists right here that if I come outside somewhere here, I can come across. Out here, I can come across. And by the way, So my support is here. And in this developing fractal, where's my outside? My outside edge is here. What's under here? Stops. What's over here? VWAP. We have a structured trade in the Trader Lab. If it qualifies based on the range, called VWAP to VPOC. So what you have going on here is mean reversion. Outside in, rotational trade. Outside in, outside in. So it's longs only at the moment, unless we go south of the border, and we're looking for this and to get into the low volume node up above. And remember, this is counter trend. We're looking to get here. Part of the joy. Hold on, guys. Just tending to business here. So this is a long, this is an obstacle, but we're trying to go here. So this is another potential long in the Trader Lab. And if you took a long here, you would have to scale. If you don't have enough range here, you got to scale ahead of this, because this is where the buyers were absorbed. So if you got long here, you're looking for this, and then into there. Remember where support is. It's down here. And where else? Here. So I got support here. I got support here. So now what you have is too high, too low, too high, pull outside. This is support down here. Now it's doing this, always a surprise. Now pull back here. This is a potential structured trade here. So it's either a long or not. So for me, I'm looking at my levels, and I'm looking now down here and out here. And I am in the confusion state because, well, we haven't gotten here. So I'm thinking, well, maybe that's it. I got a lot of sellers here. I broke here. Maybe this is now too high. Just like those are too low. Here, you see this here? Now it didn't get there, so there's nothing to do here for me. So I'm thinking shorts at this point. Right here. So I'm thinking shorts, but I also have the low volume zone. I'm thinking I want to be short, but I have to try to get the squeeze out. So this was really difficult as far as trying to time this. So, you know, it's pretty much trying to get in alignment, and I take stops like everybody else. So I put a short on here. Here, I got scaled. This is my support. And now I'm turned the boat around, going for the opening swing low and the overnight volume point of control. So that's my target. And I get taken out. Right here is my resistance. I get a scale. I'm thinking I'm okay here as long as I stay under here. This is my micro high volume in here. I tested, I reversed. Trade is no good now. Break high, and it's time to get back on the longs. So scaled into the low volume zone, going to the moon. And at that point, it's just going to the target, which is here. So that was that. Now managing the trade. I see all kinds of iceberg activity here. I see the absorption. My antenna is up. I break here. I'm trailing my stop under here. I get taken out. You know, I'm just telling you what happened to me today. Now I come back across. Now I want to get short again. Right in here. When I broke, I took a short. So here's how I look at this. Right here is support, right? I'm going to show you the fractal, what I was working with here. So this chop here is a consolidation. When it breaks high, I'm putting my stop under here. I'm also looking at this for micromanagement. But the main support is this. So right here, I come to it. You see the reaction. My stop is under here. Looks okay here. Breaks low. Now I break below this volume. I took a short. Then what's on the hit parade? The stops under the opening swing, the overnight volume point of control, and this. So this is my target for the short. So I get scaled and have a wonderful time, and just stay with it. I have another, so this is the target, 82% probability-ish, right under the opening swing, which has the stops, and then the target is this. So sitting short, then it's trade management. Now there's a couple other things here. At 9:30, where is it? We get something called the initial balance low, and I believe it's right here. Yeah, this. There's over a 90% probability we'll take out either the first hour's high or low. And I'm going, well, considering the statistics, I'm looking at this. Now, there's another trade here that's a Trader Lab structured trade. So at 9:30, the first hour's low is put in. So we break it here. That's called range extension. Now we have our volume from the variable high volume node is potential resistance. So now we have continuation trades. And this is up to the individual. Remember, we have a statistical target below around 70-ish percentile overnight mid. So that's what we're going for. So right here, let's look at the trigger. So so we have the IB continuation trade. Now, why might you take this trade? You might take it because of the statistics. We're also right here at the overnight volume point of control, which is the ETH retail price. So right in here, if we can get below this, then it might be saying this is too high. Same as the fractals, that this is too high. So I'm under this, and I'm fiddling with this. So right here, if I come out here, it's mean reversion. If I come out here, this is the mean, and in a fractal, this is the mean. So I'm coming out here. It's a mean to come back here, a mean. This is a mean. This is a mean. Out here is a mean. This is a mean. Out here is a mean. This is mean. So it's short, 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 short. These are shorts in Trader Lab for ads or whatever you want to do with it. Then it's get risk neutral and watch the behavior. Look where we're coming back. Here's the microstructure. So for me, and this microstructure, let's see if I can get this in here, is across here. So this is resistance for me. So above here. Okay, so I'm just sitting short and the teeth are chattering naturally. So I'm below the IB. These are all continuation trades. This is a potential continuation trade. Doesn't have the best location because your stop's going to be up here. You know, if that's too far, you don't have a trade that's qualified. So this was the last area. So right here, we get a reversal. Now, there's micro high volume in here. Now, here's how you might manage this trade. Now, this is subject to your individual plan. Okay. Not mine, yours. What do we know? This is too high. Sellers are here. What do we know about this volume? It was tested here. It was too high. What does that tell us about this? This little microstructure right there was too high. So too high, too high. This is too high. It's a microstructure. This, we break high. We test. It becomes too low. Your choices are the following. Trailing stop here, trailing stop here, test here, break high, exit. All those have to be vetted and need to be part of your trade plan. Once we come back through here, then we're into a condition called mean reversion, which means back here. The possibilities are get long here, back to here, and potentially out the high. And that's because the potential exists for something called a neutral day. Once you cross over this, then this is vulnerable. And that would put this back on. Now, the thing we don't know, of course, part of the joy, is if we get out here, are we going to continue the squeeze up into this? Because this is not auction. So this target comes back on the table, not a recommendation. Or now I have to give you the ors because that's what we got. Or we come out here, run out of stops, which are the buyers, the shorts, and then we fall back in. If we fall back inside, it puts this back on. So these are trades that are already part of a trade plan in the Trader Lab. So out the top. So once you're back in here, then the shorts are in jeopardy, and then it's back to here, mean reversion. Then it's the squeeze out the other side. And there's about a 29% probability this happens. But the thing that keeps me kind of interested in continuing the long is this. And it's very tricky because it might just do this and back, come out and then fall out the bottom later in the day, or just stay and make an inside day. All this is posted in the Trader Lab. The problem, if you will, is we're in an uncertain environment and we can't predict what it'll do. Yeah, and that is a problem because we want certainty and it doesn't exist. So what do you have instead? What you have is trade plan and then in conditional statements that alert you that something might be changing. I hope that makes sense. Are you guys tracking? Yeah, for a lot, the trade management, in a random environment, the thing about trade management is for a lot is posting about he was going for the overnight mid, as was I, and taking the runner out at a scratch and not having a trade management process for it. In other words, just hanging in there and letting it go. The thing is that is not, if that's your plan, that's okay. The thing about it is, what are the conditional statements that suggest things might be changing? It's when we don't get to the overnight mid, and once we get over the overnight VPOC, and the IB low and the overnight VPOC are in alignment. Once you cross here, there's a problem, and the shorts now are going to get squeezed out. And that sets up our possibility of a neutral day. So it's a change in context. So if anything, the cross here sets up a long back to here and a cover, subject to the time frame you operated. That's a conditional transition in context. So if this, then that. If not, then what? If we're going down and we're below the overnight vol point of control, if this, then that, then where? Then there. If this, then that. If not, and we come across here, which means maybe too low, same as crossing a VHVN, and we didn't get there, and the market is short. If not, then what? Then mean reversion, back to here. So cover the shorts, get long, scale here, put your helmet back on, going for a neutral day, and then trade management up here. So that was an excellent plan. The thing is the narration of the transitions. And Richard posted a great outline of contextual definitions. I think it was Sunday, and I've put a reference to that in the Trader Lab. It's up in there because the way we attempt, underline, to stay in alignment is to know when it changes and where, not if. There is no what it will do. It's only what it might do. So how do you stay in alignment with changing configurations? It's all defined before. And then the narration. Now look at what we have here. What do we do here? We took out the first hour's high. This is officially a neutral day. Two possibilities here. A short here back to here, not a trade recommendation. I mean, we all take stops, or take out this high and continue in the squeeze area. So this is an important location. Let's watch it very carefully right here. It's a microstructure. So this is what you get on a day like today. Possibilities are, take out the shorts. We have our iceberg selling. If this microstructure is too high, it would be a short back to here, back to here. That's a structured trade, and it's called a dual IBF. In other words, it's the opposite of the trade that took part at the low when we came across the IB and the overnight volume point of control. Of course, the risk, like in every trade, is that if we take this out, then we continue in here. If we don't take this out and all it was a short squeeze, and there's no buying above these stops, and icebergs are here, then right here where the sellers took over and these buyers who were absorbing the sellers right here got thrown under the bus. The micro high volume structure, I'm on the wrong book map. Hold on a second here. So right here, the buyers got absorbed by the icebergs. You got 2,000 buy stops going off. Thanks for playing. The broker's going to send you a gift basket. And the icebergs. If this here is too high, because there was absorption, and you'll notice there was no buyers here. If we stay below this, then that. If we push above this, then potential to continue on our merry way in the squeeze area up to here. So that's what we have. Not a trade recommendation, but this is Trader Lab, and there's no magic, no magic bullet, no holy grail, just an understanding of market mechanics, and maybe. Write that down. What do you have in this business? Maybe. Maybe you'll get stopped out. Maybe you'll get risk neutral. Maybe you'll get run over by a bus. Maybe it'll get to the next target, because this is called mean reversion. And in all fractals and time frames, it behaves in a similar fashion. What we don't know is this was too low right here. Sellers absorbed here. The buyers took control. Sellers absorbed here. The sellers took control. Are the buyers going to say, hey, it's on sale down here at this fractal, and this is now support, and they come in and they take on the sellers in this leg? If the sellers in this leg are stronger than these buyers, and we come back here and test, and we can't get above these guys, then the potential is to continue lower. If we push these guys out, then the potential is to continue higher. That's as deep as this is. So now we're going to watch. Are you guys tracking? And if you're in YouTube, remember this stream will be continued live in the Bookmap Discord Trader Lab, and you're all invited. There's a link in the bottom of YouTube, and that's going to happen at 11:30 Central Time. And then I will stream live narration, continuing there for about a half hour. And also, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, and etc. So let's see what happens here. This is an important level right here. So there's our sellers. It's the same guys that were here. The buyers are here. The icebergs are interacting. So this is like Pac-Man. Do the buyers consume the sellers on the test and continue, or do the sellers absorb the buyers? There's 74 buy stops coming out. So either we're going to, again, remember, what's the scenario? If we take this high out, we have a target above us. If we can't get above here, we mean revert here. That's the deal. That's what you got right here. If this is too high, then that. If not, then we take these guys out and we go here. That's what I know. The rest is maybe. So let's watch. Try to read it now. We're looking at order flow. Buyers are here. Sellers are here. Sellers are here. Right here is a micro pivot, if you will. It's an auction in a micro structure. Right there is the volume. Right here is where the stops are, and above here. If we can break low, then the possibility is south. If we break high, then these sellers in here are under the bus, and we continue into the low volume zone. This is what I know. And the rest now is up to the participant behavior. Let's see what they decide. So I can identify this as a auction. Chop, chop, chop. Is this too high or is this too low? Let's watch it. This is a triggering structure. It's not a trade recommendation. All trades take stops. I take them bravely every day because I cannot predict the outcome. I can recognize behavior, and I have a trade plan that over a large sample size gives me an edge. It's not about the last trade or the last stop or how I feel. Feelings are wonderful things, but they are destructive in this business because when you deal in uncertainty, psychologically you're in a heightened state of fear, fear of the saber-toothed tiger. What's out there? Are they going to take my stop? All that language and verbiage is going through your head. That is your primal wiring. Its job is to remind you that you can get run over or eaten by the tiger, and it's constantly whispering that fear in your ear. And it's really good, of course, as far as the surviving, out on the tundra. It doesn't work so well in this business. I call that hide. The reason you might want to consider statistics is you can manage that primal, oh my goodness, move your stop, skip the trade, or I don't want to get stopped, I want more certainty, right? All of that is the wiring to protect you. It's wonderful, except not here. If the casinos wouldn't play the next hand because they lost on the last one, they wouldn't stay in business. So they're in a business with a statistical edge. So we want to watch this. I mean, the nice thing would be to get under here. If we can't get under here, because this is where the buyers were, and our sellers are up here, and I don't see heavy selling, we have to look out for a stop here. And it doesn't mean you'll get stopped. It means if you get stopped, you followed your plan, not anything else. And that's how you grade yourself in this business. We all have stops. We all take losing days. Whatever can happen, happens. That's the business. I'm seeing more buyers here. So now we want to see if the passive side, which is these icebergs and the sellers up here, if we can hold these guys. Right here is your borderline. You can see the micro high volume here, and you got the IB. So there's stops at the IB, which we got. The sellers are here. The buyers are fighting right here. So this is an auction. This is a fight. It's the buyers and the sellers, the buyers and the sellers. The buyers are here. The sellers are here. One side is going to win. And it's not our job to, quote, predict. I know for me, this is a short, and I know for me, I'll take a stop and I'll just go, okay, that one didn't work. And now I have choices. If I have a structured trade, I can get long towards here. If this does not take this out, I would be in the short to here. That's how I trade. I'm not saying it's good. I'm just saying it's one way to kind of put it together. And over time, it's not what happens here because I can't figure it out in the sense of what will happen. What I know about this location is that it's a good location to test and see which side is going to win. That's what I know about it. I don't know anything more than that about it. And then if the sellers don't contain the buyers over here, then they get squeezed out. And if the longs that are in here cannot take out the sellers up here, then, there. So the sellers are getting absorbed down here. The buyers are getting absorbed by the sellers up here. So to get down here, the sellers need to stay under here. Now we can test So this is like right here. This is where we're going to be, north or south, right here. It's kind of like you have a map. This is the map of the auction. And the map says, well, we're either going this way or this way. Now, it might seem obvious, the market's always going to go up or down, but locations are what are important, not the outcome of the trade, because we don't have control. So for me, what do I control? I control what I do. I don't control the outcome. So, but I will tell you that this is a short for me. And it's not a trade recommendation because I know this is very important location. And if I get taken out, and it looks to me like the buyers at the moment are doing a good job because my sellers so far are not gaining traction. So it looks to me like the buyers are absorbing these guys, you see. So this is suggesting to me the potential to break higher. But I can't predict what will happen here. So I just have to sit here and not anticipate, oh, I'm going to get stopped out. I suspect I am going to get stopped out. But until I am stopped out, I'm not stopped out. So I have to let the trade fail where it fails, not where my fear takes over. Because over time, the fact I understand what this says does not mean that somebody won't just drop a bomb on it right here, because I've had that happen. So I find for me, and it's not a recommendation, that I'm better off letting the stop get taken than I am predicting what is going to happen here. So that's it. There's nothing more to it than this, and maybe. So we can get boom and squeeze, which is what I suspect, or not. So let's just watch this. I would say this is the hardest part of trading because we can know where we're supposed to, trade, and we also know it's random and anything can happen here. That's what makes this business so difficult for us because we're always projecting what will happen when we don't know what will happen. So let's watch. If you guys have questions, please post them. Remember, this stream will continue in the Bookmap Discord Trader Lab community, live streaming. And if you're in YouTube and you want to take advantage of that, there's no cost. All you need to do is click the link in the bottom of YouTube and verify your email. It reduces spammers and all that in our Discord community. And you're all welcome to visit. And this is pretty much the way it's going to be going. And if you're interested, also there's a delay in YouTube. There is no delay in the Bookmap Discord channel for the Trader Lab. So this stream, as you can see, is going, the stream is going to continue and this trade is going to fail. So we are now potentially going to squeeze up and we just have to now wait. Hard day to trade in the sense of it's two-sided trade. So now the possibility is we're back into the low volume zone. We've taken this high out and this is our next potential target. It's not a recommendation. Hold on one second here. Okay. So this is what we have now is the potential up to here. And these are not trade recommendations. This being that this is what's called a neutral day, you have the possibility to continue here or to just fall back inside and mean revert. So these can be, I would say, problematic naturally. So you just have to follow your plan. Your plan is we're back outside and potentially we might want to be long, or we fall back inside and you got to be prepared to come back here. That's the two possibilities in this. This was the absorption. And remember where the support was. It was here, buyers. Up here we had our sellers. This sets up a potential short back to here, or because of the absorption here, potential break and a long north. Not a recommendation. It's very hard to trade this because of the, we can just fall back in. So for me, it's a long. It's not a recommendation. It's a very tenuous long, I will tell you that. But this sets up here. So, that's it. And this is just an idea. This is not remember, I don't recommend trades. Subject to the trade plan, when you have this and you come back here, subject to, and again, it's trade plan specific, you would be covering here. And this would be a long here. It's all up to you. Any questions? I've got about 6 minutes before I switch over to TraderLab. I'm going to post this very briefly for you guys right here. If you want to keep watching, there's a link in the bottom of YouTube. You're invited. There's no cost to become part of the TraderLab community. It's a group of serious traders who've come together to leverage their collective experience. And it's about the business of trading, building the business, understanding the business, understanding what this is all about. The trades I mentioned are structured trades. There's 60 PDFs of these you can download in the Bookmap Discord TraderLab. Also, a library of webinars, some up to 4.5, 5 hours long of real-time narration of this kind of behavior. So you can kind of see how this plays out in real time. And everybody takes stops. Nobody has the Holy Grail, at least not yet. So instead of looking for that, it's really a matter of alignment and structured trades or setups, if you will, to try to get in alignment. And also to recognize changes in behavior. That's done through narrative process, which I share in TraderLab. And, you have to do the work. The thing about TraderLab is once you understand how the market works, you can slice it down into any, quote, time frame or fractal you want to operate in. So we have to be on alert for either continuation north or just squeeze out and come back inside. This is part of the joy. Hope that makes sense. You guys have any questions? Well, RP, the context now is up. It was right here. It looked like we were going to mean revert. It did not. So this was the last line of defense for coming back down. Once this happened, then it put the short up. So this now is a long for me. I think it's a bit aggressive, but I just sort of try to stay in alignment with it. I take stops and, I have losing days. I'm kind of over it, I'm emotionally, of course, respond to these things, but I can only follow the condition of the market. The thing that was interesting, and I posted that it's always possibilities. What are the possibilities? Well, we squeeze first. We squeeze up into this, which was the target for this morning's longs. We fall out. Then that sets up shorts, which is what was the next thing. We miss the overnight mid target. We come back across the IB low. That sets up mean reversion back this way and back outside and take this out. Once we take this out, now it's a neutral day, and that sets up the possibility of an IBF, which is what happened at the low when we crossed the IB low. This is the IB high. The IBF is the same trade from the low to come back here. So when we came across here, this sets up the long back to here and then up to here. Or actually back to here and then either down or to the other side to squeeze. This sets up a short back to here, which failed. So that now changes it from mean reversion to continuation long to there. And who knows? This is the hard part of this, of course. So this is a long, and this is this. That's it. Now it's trade management, and that's where it changed for me. And this was a suspect. All this is here is are we in mean reversion? This is an IBF that failed. It becomes an IBC, IB continuation back into this thing up in here to continue squeezing up here. And it has to be managed because we don't know. This might end up being an inside day today. I also posted that this morning. I mean, there's no way to know these things. So the idea is to try to stay in alignment with the context, and the context is always changing. Like yesterday, the context was down. There were no longs. Today, the context is two-sided, so it's long-short, subject to how you operate in as far as time frames or fractals. I hope that makes sense. And there's 3 more minutes before I switch over to the Bookmap Discord Trader Lab exclusively for the continuation and narration. Guys, if you're visiting in YouTube, please give a thumb up. Also, on your way down to the thumb, there is a link down in the bottom. You can visit the Bookmap Discord Trader Lab and take advantage of all the education. There is no cost for this. There's stocks, options, crypto, order flow with a high tier tool like Bookmap. And by the way, there's a link in the bottom of YouTube. You can get a free version of a digital version of Bookmap. It's no cost for that. And that will give you the ability to attend specialty streams on order flow and special events that are only available to Bookmap subscribers, but there's a free subscription. So I think you know how free works. So there's no cost for that either. So this is a long. So this was a short with a stop. This is a long north. That's as complicated as this is. I mean, it's just the way it is, So if you took this trade, which would be in here or here or here, your stop is under this volume here where the buyers absorb the sellers. This is what order flow is telling me. These sellers were absorbed. These sellers right here, this is the last shot. This seller is absorbed. Microstructure is here. Absorbed, absorbed, absorbed. So I did narrate that. I said, well, these guys were absorbed. That means the top, right? Now you have choices. I do not discuss trade management here, except in a kind of a conceptual way, because everybody kind of does their own thing with that. And that's based on metrics. If this is too low, then this. So when you get this, here's the deal. Exit, long, long, microstructure, long, long. These are longs. Scale, risk neutral, now helmet, trade management, because we're in a situation where we can fall back in at any time. So for me, longs to here, and then tenuously after, if depending what happens here, if I fall under there, it's the same trade from off the bottom. For the mean reversion long, it'll be the mean reversion short. So in a trade plan, I already know what I'm going to do. I'm long, going for this, who knows, trade management, whatever, risk neutral, then fall in here. Next trade is short, if it happens, back here and out the bottom. Or not, or whatever, There's also a probability, let me see if I can find it. yesterday's high, and this is sort of the, once again, the Hail Mary pass, you know what that is, right? So to take either the previous high or low is about an 82% probability. We cannot forget that. Doesn't mean it's going to happen. We could end up with an inside day. Doesn't mean, right? So, but we don't see tons of inside days. Today could be one because that yesterday's high is pretty far away. But if we get through this, we got to be conscious of this. So 82% probability we take out either yesterday's high or low. About a 72% probability we get here. We didn't get there. We are above this. So right now, the wind is, we have a bit of a tailwind, and we got to see what we do. That's it. Hope you're getting something out of this, and this is Trader Lab. Anyway, this stream's going to continue now in the Bookmap Discord Trader Lab. Please switch over to Trader Lab. You can use the link in the bottom of YouTube. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, and continue on plan development. Thanks, guys. I'll see you in the Bookmap Discord Trader Lab. See you soon.